Ladies and gentlemen, welcome to FinFluential Media. It is Friday and what a week it has been, a week to forget. Guys, we're going to get through the market, what we've done this week, and then we're going to go ahead and look at some news. So if you like this video, guys, please go ahead and subscribe. It's imperative to help small channels like mine. We're only under 500 subscribers. You can go ahead, subscribe, like this video, share this with your mother, your friends, everybody, so that we can grow this channel and that I can put out more fantastic content. Now, let's talk about the week that was, and the S&P 500 down 1.16%. However, it really did feel a lot worse, especially here on Thursday, where we were down about 3.5%. We saw a big move today on Friday, sort of getting back to those week's highs, but it was a very ugly week filled with a lot of news and a lot of data, but we got through it, and Friday we did see a bit of a rebound. The S&P 500 had its best day in 2025. The Dow Jones, as well as the Nasdaq 100, also rebounded. We saw every sector gain today, including defensive sectors, cyclical sectors, tech as a whole gained. The best performing sector was certainly technology, equipment, software as well. Financials put on a show as well. Diving into specific stocks, you can see defensives as a whole underperformed the broad market. Financials did pretty well. PayPal up 3%. I've been buying a lot of PayPal lately, sitting very pretty on this position. I think we're going to see $75 in PayPal soon. But we saw stuff like Robinhood, Nvidia, Apple, they all gained. So, the Magnificent Seven gained, tech gained, high beta stocks gained, and defensives took it on the chin. But guys, the S&P 500 is officially in correction territory. That is a pullback of 10% from peak to trough. We entered correction territory on Thursday. We did pair a little bit of those losses here on Friday, but we are still well off the highs, and it all has to do with the uncertainty surrounding this administration, as well as what it means for the economy and by and large S&P 500 earnings. But the biggest reason why we're falling is the Magnificent Seven names. Alphabet this week down 0.69%, looking very cheap. In fact, I might just go out and buy some Google, even though I have been a critic as of late, trading at 18 times and 0.5% dividend yield, looking very strong. There was a couple of news. Google launched its newest AI model, Gemma 3, that can be run on one GPU. There's actually sort of these supercomputers that Nvidia is developing. This is going to be big for robotics, particularly so that they can host a native AI. They can have one CPU, one GPU in this model. And if one GPU can run that AI, we're really going to see robotics progress forward. Google is also trying to finalize the acquisition of AdHawk. This is an ads business that measures the movements on your eyes, I think when you're wearing glasses, as well as your screens, to determine where you're looking and what ads to use. I don't know what the use cases are, but it looks like this is going to go through. Looking at Nvidia this week at $121, up 10% for the week. Towards the start of the week, we were at 105, the 105 region. So it was a pretty big move for Nvidia. And like I said, guys, anything below the 120 mark is a gift right here. I still think this is a gift, and you probably will see $150 out of Nvidia. Looking at the PE ratio, 25 times. And the biggest news out of Nvidia was that Taiwan Semiconductor, AMD, and Broadcom are all sort of banding together to potentially look at maybe buying out Intel's foundry. Don't know the details as of yet as to what's going to happen, but we do have some specific details. Under this proposal, TSMC would manage the operations of Intel's foundry segment, which produces customized chips for clients while maintaining less than a 50% ownership stake to align with US government concerns. Apparently, China is looking to have more than one chip designer as a partner. Now, this is absolutely crucial, because if TSMC takes control of this, you're potentially looking at a situation where Taiwan Semi could have 90% of the total foundry market. And that is a huge monopoly position. However, this is all speculation at most for now. Hopefully we get more news in the incoming weeks. We'll see how we go. Looking at Meta trading at 607 here on Friday, up 2% on the day, 0.5% on the week. We saw highs as high as 629, lows as low as 588. And again, these Magnificent Seven names looking incredibly cheap. The PE 23 times. Google trading at 18 times, Nvidia trading at 25 times. This is very reasonable ratios for these companies growing at mid-double-digit eclipse wide moat's virtually monopoly statuses. And there was a bunch of news for Meta. Meta's going to start testing its community notes using the algorithm similar to what we have on X. I think this is going to be for Instagram, Facebook, and Threads. They're also going to be testing a self-developed AI training chip. This is something that the Magnificent Seven names have really been looking to decrease their cost and improve performance. They want to get into their own ASICs, their own self-designed internal chips, because they realize what a monopoly NVIDIA is. And one way to dramatically decrease costs in this AI revolution is to, make your own chips, similar to what Apple has done, similar to what Amazon and Google have done as well. So Meta are in the development stage right there. There's also a couple of other news. Meta continues to get fined by the EU, and Zuckerberg's Meta was willing to shut down political dissent to enter China. China is such a big market, and so you could see they're catering to the Chinese Communist Party. Looking at Amazon, officially under that $200 mark, looking up 0.92% for the week. A little bit on the expensive side, trading at a 30 PE. However, Amazon, very resilient. What is the return of Amazon year to date? Down 10%. Absolutely insane. There was quite a bit of news. The biggest being this right here. FTC lawyer retracts resource shortage claims made from the Amazon Prime trial update. So pretty much there's a lawsuit going on right now where Amazon at least the FTC deems that Amazon has made the unsubscribing from Amazon Prime really, really difficult. So once you're in, you're kind of locked in. The FTC want it to be easier, and so they're suing Amazon. The FTC had an intern lawyer go to the Department of Justice and say, hey, based on everything, the shakeups in the government being understaffed, we're going to need a little bit more time. However, they actually retracted that, saying, hey, no, we have the resources. We're going to pile more resources into this. We are all good. So there's a bit of a mix up there, a bit of a lack of communication happening. So this will go on as scheduled. Apparently, the FTC have the resources now, and we'll see what is to come of this. But very, very interesting to see the FTC fumbling the bag. But I do think Trump's DOJ and its administration will continue to go ahead and clamp down on big tech, despite all of the donations they gave to his inauguration and probably will give to his political campaign over the next 4 years. He didn't really like any of the 2020, 2024 stuff. He believes there was massive election interference by big tech. And as a result, his government is going to go after all of them, probably except Tesla, now trading at $250, up 1% for the week. Year to date, it's been a bit of a dumpster fire, down 38% year to date. In the last year, up 53%, however. So it's not all bad news for Tesla shareholders. In this name, timing is everything, because the stock looked great up here, but that wasn't the best opportunity to get in. Still looking rather expensive, trading at 87 times forward earnings. $2.75 is the expected earnings per share. I mean, if the stock gets to 275, it will be trading at 100 times earnings. That's if it hits those numbers right there. I have word on the street that we could be seeing 220 in earnings per share. And at that rate, Tesla looks very, very expensive, if you ask me. There was a couple of news. Tesla is mulling a low-cost Model Y to regain market share in China. This is something that's sorely needed in this market. The stock did rally on the back of this. However, Tesla also today did come out and warn that U.S. trade tariffs could harmfully impact their business. Now, I don't know what Musk's role in this was, but, the Tesla board saying, hey, Trump, we need to talk. This is going to impact us in a material way. We do know that Tesla has massive swing, or I should say Elon has massive swing with the president at the moment. Looking at Apple, guys, down 7.9% for the week. So a lot of the selling we saw this week was centered around Apple, up 1.82% here on Friday. Year to date, down 14%. And this probably has to do with growth concerns and the upgrade cycle moving 1 year ahead. Trading at 28 times forward PE. We've seen a bit of a re-rating. I think at its peak, it was trading at like 38 times. Absolutely insane valuation. Even the dividend yield here is 0.5%. However, looking at news, there wasn't much of anything apart from further movement in negotiations with Indonesia here. Now, pretty much Indonesia have a law where Apple or any tech provider need to make at least 40 or 50% of the product. They need to manufacture it in Indonesia. Now, it's not feasible for Apple considering the penetration rates in Indonesia. I would say that less than 10% of the country would actually be able to afford a smartphone, and how much of that would be an iPhone. maybe less than 2 or 3%. However, what Apple are doing is pretty much getting permits, or also known as paying the government off to get in and penetrate that market, even if it is 2 to 3%, because they will make profit from that regardless. Nonetheless, that is ongoing. And the final stuff we're going to look at is Novo Nordisk. This is a name I've been doing a bit of research into. It looks attractive from a valuation perspective. Look at the PE trading at here, high teens, 19, forward PE paying a 2.9% yield, down 3% here over the last 5 days, down 10% year to date, but it's been a bit of a dumpster fire over the last year, down 42%. This is largely on the back of a whole bunch of news, the Trump administration, and a couple of their drugs not getting the efficacy that the market was expecting from them. However, this could be opportunity because Novo Nordisk warns of drug shortages, price hikes amid tariff threats. Now, it seems that if there is a drug shortage, this is great for Novo Nordisk. It could be bad because the FDA in a shortage does allow compounding of their drug. However, if we do see price hikes and drug shortages, generally when you are supply constrained in your product, that generally is good. Look at Nvidia. They are certainly supply constrained and they're making a boatload of money. And I think even though this headline looks a little bit grim, this is probably largely positive, especially considering the valuation of the company right now. I mean, you look about 2 or 3 years out, this is trading at a single digit multiple. That's very, very attractive. And this company has a wide market leading share and something like 80 drugs in the pipeline right now between phase 1 and phase 4. I may do a deep dive here on the second channel, but that is it, guys. If you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.